Quick commercial, everybody. I'm trying to grow out the OEC YouTube channel, and I would really appreciate it if you subscribe and like the channel and help me grow. Share the videos, share them with your friends, send them out there to the world. Help me spread the message. Hey everybody, Signet here with the OEC. In this video, I want to talk about the RSI Laguerre again. This is something that I've done a couple of videos on. I've explained how this indicator works in a number of videos, and along the way, I also discussed the signal from this video or from this indicator. So the idea here is that the line that you see in blue, that's an RSI 2. It's been smoothed a little bit, but it's still the RSI 2. Now, the creator of the RSI, Wells Wilder, he wrote a book and talked about using the RSI 2, and what that means is you take your RSI indicator and you set it to a 2 period, a 2 candle look back. It makes it a very choppy indicator. Somebody took that idea and added a mathematical calculation to smooth that out. What we end up with is a magnetized RSI. It sticks at the top or it sticks at the bottom. You don't really want to use any kind of in the middle signal. So whether it's pointing up or pointing down doesn't really matter. What you want to see is that it's magnetized across the top or that it's magnetized across the bottom. Now I'm going to pause the screen here for a moment, and I'm going to turn off a lot of this noise down here so that we can see the RSI itself a lot better. Alright, so I've cleaned it up a little bit, and now we can really take a look at just the RSI side of this. Now, the way that the creator of the indicator built it is that it would smooth it out, and this means that when we combine it with the gamma, we can actually identify when a market is making a move, if it's moving with energy behind it or if it's moving to gain energy within the move, right? And we learned that a market does move that way, that it does move to make energy, or that it does move while it's burning energy. And that's a nice thing about having the gamma on there. But if you only look at the RSI, I'm on a 1500 tick chart. Suppose, for an example, that I wanted to find a trading signal. Should I go long? Should I go short? Should I be bullish or bearish? I could, for an example, step up to a 3000 tick chart. Now, from the 3000 tick, you can see that we just had a crossover signal here. It's a very bullish signal. It could fail. Let me point out back here where it did fail, right? The market rallied up a little bit in that pullback, and then it came right back down again. But in that pullback, that was a part of this really beautiful move, and that was a Fibonacci measured pullback. That was typical market structure. It's what you would expect to see if you were short in the market, right? And let me draw that a little bit differently. Let's say remove that. So we would expect to see that kind of move in the market, and that pullback was just another chance for people to add into a trade, or perhaps to join in if they weren't yet in the trade. So in this signal, that was you might call it a false signal. For me, I would call it an entry signal. And the reason why is to me there's something missing from this indicator, and it's something that I've used with a lot of oscillating indicators that go from 0 to 100. Think about a football field or a basketball court. Everything starts in the middle of the court, and from the middle, the players take the ball to one side or the other. Well, if you look at an indicator that goes from 0 to 100 and you think about the 50 line in the middle, that is the start of everything. So when I see a bullish RSI and it fades down near that 50 and then rallies back up, to me that was a pullback entry. That was a signal saying, hey, there's another chance to join into the trade. Okay. So this move here was nothing more than giving you a heads up that, hey, you could have an opportunity to join into this market here. And then you could take that bias, you could take that signal, and you could go into the smaller time frame or the smaller tick and begin looking for entries that match that signal. So let's go to the current. Okay, we were magnetized across the top. We had a little bit of weakness that gave us this down signal, and now we're crossing over. And you could be asking, yeah, but what are we doing? Are we crossing over with a J hook? Is this a long signal or is this a short signal? Well, you don't have to guess. You can wait for it to give you that answer. If it gets to the top, we're back to being bullish. You would want to look for long opportunities on a smaller time frame. Okay? If it rounds over and goes back down, then that's going to be a signal like back here, and you should be looking to join the market to go short. This isn't a signal telling you to go get into the market. It's a signal offering you a bias or a direction. And remember what I said at the start of this video. When it's in the middle or it's pointing to a certain direction, it's not really a very useful or very helpful indicator. But once it has magnetized across the top or the bottom, that's a continuation signal. That's a signal saying we're strongly bullish or we're strongly bearish, right? And look at the move through that. You would have been good to find short opportunities through that move, okay? So I wanted to point out that the indicator is on Trade of 8. Of course, it's on Thinkorswim already too. You can use oscillators with this example, not just the RSI. There's the stochastics, the William percent R. There's a lot of different indicators that are oscillators you could use this same concept for. So suppose we didn't want to wait. We wanted to be aggressive. And we say, well, I got a crossover to the upside. And even back here when we had a crossover to the upside, we made almost a 70-point run. I want to look for long entries. Great. Use that bias and look for your long entries. Go into the smaller market, whether you're going to use time or just a lower tick value, and begin looking for an opportunity to go long. Now here you can see that we're breaking out and that we're already magnetized at the top. Again, you don't have to use this for a buy signal. You could say, all right, well, I'm bullish and I want to find long opportunities when they present. For me, when they would present, it would be for a Busby, for an example, because we are getting ready. We have broke out of the top. I would want to see a Busby and then take the trade to go long. And perhaps I would want to see that Busby while still having that magnetized RSI. All right. So real quick, I'm going to swap back over and turn the gamma back on, and we'll finish this video with a discussion about the gamma. All right, so I turned off the RSI side of things, and now I only have the gamma showing. And you can see that the micro NASDAQ typically holds a gamma low side of around 40. And we're getting into that right now. We have gotten lower, and you will find lower readings, but those were tail end readings after very steep, very strong moves to the downside. Okay, notice the same one here. We did get down to 30, but again, it was after a very deep, very steep move to the downside. And here we actually got down below 30 to a 29, and again, after a deep, strong move to the downside. So other than that, when we're looking at a market near its 40, it was where these other moves were happening, right? Not so strong of moves. Notice that we're getting into a 40 while we're rallying to the upside. Now, what does that mean, right? What does it mean when you see that we're getting to a 40 and the market is moving up? It means it's burning energy to get there. If we back up to 40 here, notice the market was rallying up and it was burning that energy, and it burned it all the way down to a 40. And then the market paused. And in that pause there, as it consolidated, it gained energy and then began burning that energy again. It just took a small breather in the market, right? It paused, so to speak, and it called timeout. Okay, so it burned the energy, it paused to gain energy, and then it made its move. In this right here, from this candle to this candle, it was gaining energy in the move. And then it began burning that energy again. So on the time frame that you're trying to trade, gamma is going to be a little misrepresented, of course. You can see that we are using that energy in the move, and that's great to see. We can identify that very easily. But if you were looking for a trading signal, you again would want that from a higher time frame. That way you could get a bias. Suppose we go out to this 3000 tick chart again, and you can see that the gamma is being burned on this time frame as well, helping confirm to you that on multiple levels this is burning energy. You have confluence of the indicators showing across multiple time frames that this market is making a move, and it's making a move with energy behind it. You can also see that we're nearing the end of that energy, that we're getting close to a topping out spot. Now, we would already know that, right? Because when we look left, we can see that, oh, hey, there's a pivot point there. We're coming up into a level of resistance, and we're running out of energy. Great, that's an area where we would expect to pause. And it doesn't mean that it has to. Remember, we have the smaller time frames. Okay? But everything here is warning you that, hey, you've got some resistance overhead. You might want to tighten your stops. We're running low on energy. Do not believe for a moment that this indicator won't get down here and that the market could just continue to run and run and run, because it could. This indicator isn't going to tell you the market's going to stop, but it is giving you a lot of warning signals, okay, that this market's about to pause, that it's about to become exhausted, and it's going to have to do something to gain energy. Now, one of the things that a market does to gain energy very quickly is reverse. So when a market pulls back, it will gain energy very quickly. Coincidentally, that pullback to structure right here would be a pullback that we would consider a Busby. So in that Busby, it's actually reloading the energy for another move, perhaps enough energy to break through this overhead resistance. All right, guys, I'm going to leave the video at this point and encourage you to watch some of those RSI fractal energy videos that I've done. You can use this indicator as a day trader, a swing trader, a position trader, futures, stock, options. It's a universal tool to help any kind of trader. I appreciate your time, and I look forward to seeing you at the next video.